Hello and welcome to the trade on this Monday. Let's take a look at, well, before we get into the charts, what traders are watching out there today. Lebanon's Hezbollah has fired heavy rocket barrages at Israel, and the Israeli military has said houses had been destroyed or set alight near Tel Aviv after a powerful Israeli airstrike killed at least 29 people in Beirut the day before. Oil prices climbed on Friday, settling at a two-week high as the intensifying war in both the Middle East and Ukraine boosted the market's geopolitical risks premium. Japan and the US aim to compile a joint military plan for a possible Taiwan emergency that includes deploying missiles. That's according to Japan's Kyodo news agency. And Jay Bhattacharya is now the presumptive favourite to be selected by President-elect Donald Trump as the next director of the National Institutes of Health. Elsewhere, Arabica coffee has risen to a fresh 13-year high, buoyed by concerns that next year's crop in Brazil may be smaller than early expected, while cocoa prices are also sharply higher. Let's now get across the technicals and the charts that matter. Michael Gable joining us from Fairmont Equities. Michael, welcome. Good to see you on this Monday. Let's start then with what we're seeing on the local market. You know, we see those highs continuing to be taken out on Wall Street. Same happening here?
Yeah, look, at the end of the day, our market is still trending. So, you know, you get your little dips along the way, but you know, in terms of our broader market, you know, as I've been highlighting since sort of early last year, you know, as soon as we break through that 7,600 level, because the market had, I guess, formed that level over such a long period of time, you know, at least a couple of years, yeah, the breakout would end up with a fairly decent move up towards, I think at the time I was looking at sort of 8,400. But yeah, look, that's basically a weekly chart of the market trending. Just want to remind everybody it's going up, so you know, don't get too concerned at this point in time. Just stick with the trend.
Well, you'd see that trend certainly over the past 12 months. So the figure 8,500 being mentioned year's end, is that insight, do you think?
Yeah, look, it's. I mean, the market will get drawn towards these round numbers, but I think it's a bit foolhardy to put a target on it right now. You know, as we'll see with one particular stock shortly, you know, things can surprise on the upside. So, yeah, again, you just want to stick with the trend, and this is basically a market that's trending. So, yeah, stick with it. Don't get too bearish yet.
All right, well, let's go to the micro then. With those stocks that you have a focus on, would CBA be the one you were talking about then, because it continues to move higher and higher?
Yeah, it's look at that. Everyone was writing them off at the start of the year near sort of $110, and now it's pushing towards 160. So, you know, my most recent comment on this program back in October, we said, look, that pullback in CBA looks to be over. And it's a buying opportunity again, but yeah, I wouldn't have expected it to hit this level so quickly. So yeah, you just have to stick with trending stocks. They can surprise on the upside. But the purpose of this chart today is just to show that you shouldn't necessarily chase it right now. At the bottom there, we have the RSI, which is a momentum indicator. What I've circled there is the fact that it's overbought. Now, you don't want to use that as a signal to sell, because a strong trending stock will flash up as being overbought. It can flash up as being overbought for quite a while. So CBA first started to look quite overbought a couple of weeks ago, and if you sold then, you'd miss out on an extra $10. But what it does indicate is that it could be due at least a sideways cooling off for a bit, or a very short-term dip. I'm not talking a collapse down to you know, tasty levels near $100, but look, it just means that if you're in CBA, hold it. It's trending strongly. If you're looking to buy it, it's a bit overbought for the moment. Try to find some weakness over the next few weeks, and that would be a better buying opportunity.
Well, good luck with that, trying to find some weakness. It's not going that way, is it? However, the next stock, well, you do have some opportunity. A very different story with Woodside, which has struggled.
It has. No one likes it. I mean, the oil price has fallen, of course, but you know, I think sentiment towards Woodside is extremely low. There aren't many holders. in energy stocks, it's not very popular. I mean, when you look at the composition of energy stocks over in the US, I mean, you're talking, almost record low participation in that sector. But look, it's early days, but I'm seeing signs that potentially it might be getting ready to break this downtrend. So, downtrend's defined as the lower highs. So each of those peaks becomes lower and lower over time, and the lows get lower and lower. What I've circled there is the low from earlier this month was actually higher than the September low. So it's sort of broken that sort of trend of making those lower lows. It needs to do a lot more work, but Woodside, if you're a bottom fisher, potentially you could start picking it up here, but this is one to keep an eye on. I think over the next several weeks it may well start to base out and break this downtrend, and by the time everyone else catches on, it'd be well up into the 30s. But yeah, let's keep an eye on Woodside over the next several weeks.
All right.
Might have seen a low.
Let's move into the consumer discretionary space with the conglomerate Wesfarmers. You're seeing some negativity emerge here.
Yeah, there's positives and negatives I'm seeing on this chart. So again, this is one to keep an eye on. Obviously, Wesfarmers is a highly held stock. Firstly, on the negative side, since that peak in August, it has been making lower lows, and I've indicated that with the arrows there. There's 3 arrows showing that it continues to fall lower and lower each time. But every time it does rally, it tends to sort of spike up towards this sort of 72 level, and that's that blue line there. So there's clearly sellers up at that level. It looks like it's just nudging above it today, but whether it's $72 exactly or 72.50-ish, I guess the point I'm trying to make is there's a very clear line of sellers there. For me to flip positive on this stock, I want to see it above that blue line. If we get a very nice strong close today or in the next few days, then that would indicate that anyone selling this 72 is done. They're finished with their selling, and it'd be ready to head higher. But I think on balance, because of those lower lows, you just need to be cautious and just keep this one on the watch list for now.
All right, so that's a look at Wesfarmers. Now, you're saying, here's one perhaps for trend followers in Superloop. So talk us through this, what you're seeing on the chart.
Yeah, so look, I think, this is a stock that we're holding for clients. I think what investors need to do is make sure that you're holding stocks in your portfolio that are trending. So as you can see with Superloop, it's just displaying, sort of textbook uptrend characteristics. So what it does is when it does rally, it might rally for several days and make up quite a bit of ground, and then it consolidates that move by heading sideways. So I've indicated that with the blue lines. We could see these nice sort of horizontal consolidations along the way, and now it's kicking on again. So I think this is a stock that can be bought on any dips. It's got one of the strongest uptrends in the market at the moment, and very sustainable because it does consolidate those moves by trading sideways for several weeks at a time. It means that the trend is sustainable. What you don't want to see, I mean, it's fantastic when your stock moves up very quickly in a short period of time, but those sorts of moves aren't sustainable. This one is. So a very good stock for our viewers to try to buy on a dip.
All right, maybe you want to try and get in before an uptrend takes place, which is obviously not easy. However, you're taking a look at Bega. Yep. What are you seeing there?
Yeah, so this is an example of a stock that that's potentially about to commence a new. Well, it's been in an uptrend. What it's done since September is trade sideways to consolidate that previous move. So when I mentioned, it's great when your stock goes up very quickly, but it's not sustainable. We could see that with Bega in August there. It rallied very strongly from the low 4s to the low 5s, but it needed to consolidate. It needed to, the profit takers wanted to step in, and that's been happening, but it hasn't been able to push the share price down, which is a positive. What I like is charts where you get a very clear horizontal level to sell and a level to buy, and in this case, you could see that very clear trading range. So in my opinion, it's a case of, when you break the bottom line, that's your sell signal, because so far we've got buyers there. But if it breaks above that upper blue line, so around 540, that's your buy signal. So, if you're looking for, if any viewers looking for something to break to the upside and possibly recommence an uptrend, Bega looks great to keep on the watch list. So a break above 540, that's your buy signal, and then it should go on for a number of months trending higher.
Michael, great to get across those charts and what you're seeing there. Thanks for joining us from Fairmont Equities.
Thank you.
And that's the trade for this Monday.